Welcome to Inside India. I'm Amitoj Singh at India Energy Week inside India in Goa. Here are your headlines. India and EU reaching a long-awaited landmark trade deal that will slash tariffs on a majority of EU's exports to India and reduce dependence on the US. European Commission President Ursula von der Leyen saying it's sending a strong signal to the world.
In a time where the world is becoming more and more fractured and fractious, at this time, India and Europe are choosing dialogue, collaboration, and cooperation.
India's Minister of Petroleum and Natural Gas, Hardeep Singh Puri, also sounding optimistic about a deal with the US in an interview with CNBC.
It's work in progress, and I'm told by the people who are in it that it's at a very advanced stage, and I'm hoping that sooner than later that will also see the light of day.
India also expanding its energy ties with Canada as the North American country looks to reduce its dependence on the US and diversify its export base. We will hear from Canada's Energy Minister coming up on the show. And the US dollar trying to climb out of a rut after President Trump shrugged off the currency's weakness, sending it to a near 4-year low, while gold soars past 5,200. Well, JP Yong has just returned from his travels in Southeast Asia, and he's going to give us a little bit of a check on the Asian markets. JP, what are you learning?
Yeah, more travels around Singapore, Amitoj. But happy hump day to you guys out there. It's looking a bit mixed, actually, once more here for most of these Asian equity indices. And while you enjoy the sunshine out in Goa, it seems that in this freezing studio, we're seeing once again that it is split between greens and reds. Right now, we are seeing that the likes of the Nikkei 225 continues to wilt on the back again of expectations of a possible rate hike that could weigh on equity valuations there, despite the fact that the yen has weakened in intraday today's session. There you have it, the Tokyo benchmark about 0.6% in the red. No signs of any let up, that is, for the South Korean cost futures, now holding firm to their breach of 5,000 so far today's session. It's not just the chip makers, but also the likes of Hyundai-related stocks on the back of a lot of buzz with regards to robotics. That's also doing a lot of lifting for the benchmark out in Seoul. But it's worth also zeroing in on the Hang Seng Index in today's session. It's in the green alongside the Shanghai Composite, but again, the property stocks among those to watch. And as we wait for that board to actually roll, we'll see here the likes of China Vanke worth looking at, the embattled property developer that's facing a lot of default risks right now. They have avoided immediate default because of more bond payment deferrals, and that's lifted their stock with the likes of Shunmao and also China Resource Land also in the green. Now, we seldom look at this one particular emerging market, but given we are in Southeast Asia, you asked about it, take a look at the Jakarta Composite, which has tumbled and plunged by as much as 7% earlier on today, with MSCI issuing warnings with regards to some of the quality of the stocks and also the free float requirement of some of these markets. And I was hoping they would pull up these stocks with showing the likes of Barito Renewables and Chandra Asri, actually, because these are two of the 10 biggest stocks on the Jakarta Composite that saw huge surges last year, but both have a free float of below 10%. So it is worth looking at the free float requirements of some of these companies that are driving some of these things in emerging markets, because it seems that the free float will be put under more scrutiny in the coming months, which will impact markets like that in Indonesia. Amitoj, back to you.
Thanks for that, JP. We're also watching the dollar sinking to a 4-year low against a basket of currencies. Right now, as we understand, well, it's not looking quite good. And this is something, it becomes even more interesting because President Trump basically saying that he doesn't really get impacted by this. He was asked about recent declines earlier today, and he signaled he was happy with the dollar's value, calling it great, but wouldn't want it to decline further. Take a listen.
I think it's great. I mean, the value of the dollar. Look at the business we're doing. No, dollar's doing great. You know, it's very interesting. If you look at China and Japan, I used to fight like hell with them because they always wanted to devalue their yen. You know that? The yen and the yuan. And they'd always want to devalue it. They devalue. And I said, not fair that you devalue because it's hard to compete when they devalue.
Now that as the Fed also kicks off its meeting today, all the uncertainty around the globe right now, around the dollar really, further sending investors into safe haven gold, the precious metal hitting a fresh record today, soaring past 5,200. Let's also take a look at the Indian markets. They come online in about 40 minutes. Here's what Gift Nifty futures are indicating at this point in time, that it will be a slightly higher open. What we do know is that Nifty was, well, at 25,175 yesterday at close, and it's indicated to be around 25,441. On a positive note, yesterday staging that rebound, and seems likely that today we could see a further upside. This despite the negative reaction we got in the auto stocks after India and EU announced a trade deal. Now let's break that down. What happened really? All right, so the India-EU trade deal really dominating headlines out here in India. India and EU signing a landmark trade deal yesterday. The long delayed agreement will cut or eliminate tariffs on most goods, covering more than 96% of trade by value, and is expected to double EU exports to India by 2032. The EU says the deal will save its companies about 4 billion euros in duties. EU Commission President Ursula von der Leyen said through the deal, the two sides are sending a strong signal to the world.
This agreement forms the foundation of the crucial partnership between Europe and India, and we are sending a strong signal to the world. In a time where the world is becoming more and more fractured and fractious, at this time, India and Europe are choosing dialogue, collaboration, and cooperation.
India will also gain tariff-free access for products like textiles, leather, gems, leather and gems particularly interesting, including textiles, simply because the US has imposed those tariffs on them. And the EU will get a sharp reduction in its luxury car, wine and industrial exports. The deal still needs legal vetting, which could take several months and face hurdles in Europe. New Delhi hopes the FTA will take effect by the end of 2026, but analysts expect that it could potentially be till 2027. The deal comes at a time when countries have been looking to diversify their trade ties and cushion the blow of Trump's steep tariff regime. And this is exactly what we spoke to India's Minister of Petroleum and Natural Gas, Hardeep Singh Puri, about here at the India Energy Week. Shortly after that EU-India trade deal announcement, here's what he had to say.
On the Indian side, there are several sectors which are looking to an enhanced European market. I read somewhere a silly note saying, but Indian preferences there. That's part of the GSP. The globalized system of preferences was a scheme which the developed countries used to extend to developing countries and the least developed countries as unilateral accessions. Over a period of time, those have been diminishing. That doesn't matter. But, you know, if our exports, and I'm sure in sectors which are very central to our economy, like textiles and clothing and other areas, they begin to open up more. Obviously, on the European side, they have expectations. But I think the India-European Union free trade arrangement is good news. It will have to go through some processing, and I don't want to get into that. And when it sees the light of day, it will be a major, significant, positive development. As you perhaps know, we already have an arrangement with the EFTA countries, European Free Trade Agreement. Those are somewhat on a lesser scale, smaller economies. EU 27 is big. We also have, trade negotiations underway with other, countries, including the United States. As somebody who's been a professional diplomat all his life, who believes in the multilateral system in trade, I'm looking forward to all of these getting negotiated quickly because...
Okay, about the US.
Well,
if you mentioned it, because we keep waiting for information around that.
You see, it's work in progress, and therefore, it goes through various, sometimes publicly aired, commentary, which I always try to avoid. But I'm told by the people who are in it that it's at a very advanced stage, and I'm hoping that sooner than later, that will also see the light of day.
Now, one of the key themes here at the India Energy Week is, of course, energy transition. I also spoke to the Minister Puri, about this. And how fast is India moving from oil to other sources of energy? Has that slowed down because energy security has become more crucial in this new geopolitical order? Here's what he told us.
I'm not even worried about people putting timelines on fast enough. I'll tell you something.
Yeah.
My companies, I'm talking about ONGC, IOCL, etc. If our total net zero target is 2070, they're all going to do it by 2040, 45, which compares with all the developed countries. I think India is a country fast on the move, transitioning very fast. The sustainability transition is very fast. I think we should hold judgment in terms of this thing. We are the only country, as far as I know, in this league which has met its Paris commitments. So anybody turning around saying it's not fast enough, we met the Paris commitments.
For our own goals is
No,
what I meant.
I'll tell you my own goals. I am never satisfied with all successes. But you know how many other countries in the world are meeting the Paris goals? We met them, but I'm going a step further. I would like to do it even faster,
Got it.
even quicker,
Yeah.
and move away from this thing. Could you have imagined when I was new into the portfolio and somebody had told me you've got to do 10% biofuel blending by 2022, I would have not believed it.
Yeah.
And this was in 2021.
Well,
we did it 5 months in advance.
Yeah.
We had a 20% target for biofuel blending for 2030. We did it 6 years in advance.
Hardeep Singh Puri was also on a panel with Canada's Energy Minister, Tim Hodgson. During the panel, Hodgson talked about Ottawa diversifying its energy supply and seeing an opportunity to work with India on that. Take a listen.
Canada used to provide 98% of its energy to one customer. We are committed to diversifying our supply. We see the opportunity to work with India, as was said, to the fastest growing demand for energy in the world will be in India, whether it's LNG, LPG, uranium, where we have the world's largest supplies of uranium, whether it's oil. We made a mistake. We relied on one supplier for natural gas, and that was a very strategic blunder. We can never let that happen again.
And we will talk to the Canadian Energy Minister, Tim Hodgson, later this hour about those plans and more. Before that, a conversation with the CFO of JSW Steel is lined up on the other side of this break. So big interviews coming up, the Energy Minister of Canada and an interview with JSW Steel. Don't go anywhere. Welcome back. This is Inside India. We're coming to you live from Energy Week in Goa. JSW posting a stronger than expected jump in third quarter profit as strong sales volumes helped offset weaker steel prices. Net profit for the quarter nearly tripled year on year to about $233 million. Revenue rose more than 11%, both topping forecasts of analysts. Now, the company said crude steel production rose 6%, while sales volumes jumped 14%, driven by healthy demand, domestic demand that is, and capacity ramp-ups at its Vijayanagar plant. Although steel prices remained under pressure during the quarter, recent gains since December, supported by India's 3-year safeguard duty on steel imports, are expected to bolster the sector in the near term. And to talk about this, we have, JSW CFO, Swayam Saurabh. Swayam, I appreciate you coming on and talking about this. It is earnings season, but it's also a season for FTA, geopolitical order really shifting. I want to start by asking you, we do understand that there will be marginal difference when it comes to steel from this EU-India FTA, but there will be certainly slightly lower tariffs. So how do you plan to leverage that in terms of your margins, in terms of your global expansion? How do you plan to do that?
Good morning, Amitos. Thanks for having me here. Yes, of course, we are excited about this EU trade deal because although there is no direct mention of steel, but we do think, given 71 odd billion euro which India exports to EU, would expand, and part of that will also include engineering goods. So we see an opportunity of potentially a market which will only get bigger from here on. But as a company, our fundamental focus has been domestic because domestic market has been growing well, and we expect over next 5, 7, 10 years this growth will maintain. So all the capacities we are creating are not sort of dependent on exports, but it's a very, very welcome news, irrespective, because it brings far more stability to all the uncertainties we have seen during last 9, 12 months.
All right. I do want to ask you about one particular red line that we were hoping there would be some flexibility around, and from what we gather right now, that's not entirely changed. And this is because your own management has said the company exports around 1.2 to 1.3 million tons per year of steel to Europe in recent years, and Europe has historically been one of the largest destinations for Indian steel exports overall. But these exports have faced downward pressure due to the EU's carbon border adjustment mechanism, the environmental standard the EU puts on countries like India. How do you view this, given India has been saying effectively that, look, we're a developing country, we can't follow those standards?
No, absolutely. I mean, to give you a context, our exports in our total mix historically has been, if you go back 2-3 years, about 20-25%. Gradually, that has been coming down. So I maintain what I said. By design, the capacity which we are creating are not meant to be exported. Of course, capacities come lumpy, and you have a period where you may have to do some export. If you look at this year, our export in our total mix is about less than 10%. And you are right, large part of this is towards EU. We are, as part of our growth plan, going to create a low emission site near Mumbai, which we believe will meet CBAM requirement. And we remain confident that, the quantum of import, which gradually is coming down, we would still be competitive with low emission steel and in years to come.
Net, is this what you expected from the deal? Is it going to give you a boost?
We of course had, conversations, in terms of what steel industry should get. But of course, it's a deal where, everybody doesn't get everything. It's a great deal nonetheless. And I'm very positive about, engineered goods from India, which consume steel, which should see an expansion in time to come. And that would benefit all domestic steel players, including us.
Okay, let's talk about your earnings season. We've already given out the numbers, but shares jumping around 5% when the numbers came in. I guess what we want to understand from you is how does this shape up your Q4? And given everything that's happening in the world, how are you being dynamic about it?
Look, I mean, if you look at this year, 9 months has been fairly tough. In quarter three, we saw prices touching multi-year low. But if you look at our results, our volume grew 6%. And if you take into account the fact that one blast furnace was actually shut down entire quarter, the volume growth would have been significantly higher. Our sales also grew 14%, while market grew just close to 4.6%. So this is something we have been doing very consistently. We have been very disciplined. We have been executing right. We have been capturing domestic market as well. Going into quarter four, we remain more confident because quarter four historically is a quarter where is a historically strong quarter, and that means volume should be better. We also started to see price pressure easing after safeguard duty was announced towards end of December, and that also means that some margin pressure should go. Of course, we are seeing costs going up, so coking coal is likely to go up in the quarter. But at an overall level, I see quarter four as better than quarter three with significantly better volumes, and more importantly, margin should be better.
We're also hearing from analysts and brokerages basically saying that you will predicted to actually increase your market share. But the question is by how much? And they're saying this because of superior execution capabilities, downstream focus, and significant deleveraging post that JFE BPSL deal. So if you had to tell us how much market share you see yourself getting, let's say in 1 year or 2 years, could you?
Let me not put a number here, but if you look at quarter three, our market share in domestic went up from 15.6% to 16.3%. What we are focusing on is meeting, India's domestic demand, which is growing very well. I mean, this year, YTD, the demand growth has been around 7%. But if you look at last 4 years, demand growth has been in double digit. And despite that, India today consumes, less than 115 kgs of steel per capita. That means the runway to grow is very long, and it will there for next few years. So we are very confident about it, which translates into our growth plan. We have announced, earlier that we'll go to 51 million ton. Right now, the ambition is actually to go further, given BPSL deal will create a significant deleverage, strengthen our balance sheet. We think we have an opportunity to actually grow faster. So we are just focused, in creating those capacity, catering the domestic market, which is very positive, and market share is just an outcome of that.
Okay, very interesting. I want to go back to the last interview, Swayam, you did with us. We asked you about safeguard duties, and you said that we've seen prices improving towards March, also in April, which is something one should expect going into quarter one. But we still remain primarily a domestic producer, and that you're building capacity for India, and that you think the market is going to be able to effectively absorb this particular safeguard duties. Now, in that context, I want to ask you about this heightened industry discussion that we've been seeing regarding these. Steel imports from China, big concern. How do you explain JSW Steel's position right now on this issue, and how do you believe such measures can level the playing field for all domestic producers? Have safeguard duties on these Chinese imports actually protected these margins effectively?
Look, price is very largely driven by sentiment instead of actual trade. So when I was here last, we were bullish about safeguard duty, which was provisional for 6 months, to be extended for another 3 years. Now, what had happened is in November, the safeguard duty expired. And the expectation was an immediate renewal, which did not happen for 1.5 months. And during that period, the prices in domestic market went 6 years low, And, while the costs are still holding strong, prices went down because it's a lot more sentiment driven. Large reason is China, because China, continue to export more every year. Based on our numbers, China should have exported about 133 million ton in CY25. That created the pressure. But the moment safeguard came, the domestic manufacturers had some ability to raise prices. Or the market was, becoming quite tough from a margin perspective. So what safeguard duty has done is created more certainty, given it is for 3 years. And that, in my view, creates a more fair environment for domestic operators to actually operate and run a business, which was becoming unpredictable given we did not know how bad China's demand is right now and whether there is a bottom in sight. But safeguard duty at least ensures there is a threshold around pricing which can then be held, which is what we saw in last week of December and also first week of January.
Okay, well, that's a message to the government. Would you want to give another message to the government? Because budget is around the corner. And while we don't know really what's going to happen in this particular sector in steel, do you have any expectations? Is there something that you can say would help JSW Steel the most if it happened?
Well, government has done a number of things this year. I mean, if you just start listing down all the reforms, including GST, this is going to only help consumption. And, a sector like us require consumption getting held well, in order to basically, do what we do. In terms of expectation, we believe that government will continue to spend on infra, something the country needs. And if you look at, actual steel consumption in India, large part is driven by central and state government infra. So we expect and we hope that this continues. While we are much more bullish at this moment about, private capex start coming in, also some, rural recovery, which should actually translate into better steel consumption. So all in all, while China as a country, will fix eventually so that the pricing pressure on global, comes to a more manageable, palatable situation. We are very confident about India as a market. We are committed to India as a domestic player, and we think that next year will be better.
All right, so I'm Saurabh, CFO of JSW Steel. Thanks so much for joining us on the occasion of your Q3 earnings. We really appreciate you coming and look forward to you coming back. We speak to Energy Minister Tim Hodgson on the other side of this short break. We're going to ask him a couple of questions about how Canada is rethinking its energy strategy and whether he sees new opportunities in diversifying energy trade toward India. Now that conversation right after this. Welcome back to this special edition of Inside India. We're coming to you from India Energy Week right here inside India in Goa, where we are speaking with top policy makers and industry leaders. And of course, India's Petroleum and Natural Gas Minister Hardeep Singh Puri himself, he told CNBC yesterday that the net oil importer is stepping up exploration efforts to meet its growing energy needs while also deepening energy ties with Canada.
We've gone from production sharing arrangements to revenue sharing arrangements in the traditional energy sector. Out of our 3.5 million square kilometers of sedimentary basin, he opened up 1 million square kilometers, which was no-go area.
You're very excited about exploration. I want to talk about that in just a bit.
Well, that also. And no, but he's announced under Samudra Manthan, in his address to the inaugural address, he talked about $100 billion of exploration protection. And his instruction to us, dig, go and look for the thing.
There's a 2.8 uranium deal between India and Canada that's been reported on. Can you shine some light on that?
No, I'll tell you something. First of all, I have had, Amanjot, in the last few weeks, I think, maybe not more than 6 weeks, I've had the privilege of hosting 3 Canadian ministers. One was Minister Sandhu, then I had the Premier of British Columbia a couple of days ago, and today Minister Hodgson. I must say my discussions with each one of them was not just reassuring, but it filled me with optimism. You know, the way you and I look, earlier I thought India-Canada relationship had been just reduced to discussing a certain fringe sort of a streak, and I don't want to use adjectives because I don't want them to coming after you, after me, but you know, it was a peripheral thing. Today, India-Canada can build on solid economic this thing. I will tell you, let me give you an example. Sure. You know, when he says that they have 100 years of reserves, all right, forget that. That's the future. You're looking at what could be done. One of my companies, IOCL, has an investment there in a facility. They want to extract that and bring it here. The Premier of British Columbia told us they're building 6 liquefaction plants. If we can do that liquefaction there and bring it here, see how much I gain.
So Hardeep Puri sounding extremely optimistic about everything that's happening between India and Canada, particularly when it comes to Canada. Hardeep Puri also very excited about excavation, India making some reforms around that. We'll come to that later. Tim Hodgson is Canada's Minister of Energy and Natural Resources, and he's right here with us. I really appreciate you joining us on the occasion of Energy Week and talking to us about everything that's been happening. I saw you on stage yesterday speaking, of course, to dignitaries and Hardeep Singh Puri himself. I want to start by just zooming out of India for a bit, because we had this big development overshadowing day one, which was the EU-India FTA. And as a result of that, the question that came to my mind when I thought of you is that, well, Canada and India have restarted their negotiations, will do that in a couple of weeks. But it's kind of been kickstarted, this entire conversation globally of middle powers, by your Prime Minister when he spoke at Davos. So my question is, has he fired the gun that started the race where everyone is now coming together themselves?
Well, first of all, it's great to be here. Secondly, you know, what he said at Davos, which I thought he called out what the world was seeing and understanding. And most importantly, he talked about a path forward, a positive path forward. So what he said is when world powers or hegemons are increasingly using the global integration that we were all working towards for economic coercion, or where they're using tariffs for leverage, middle powers have a choice. They have a choice to rewire how they do business. What he specifically said in his speech is if middle powers reorganize their economies, they will be less susceptible to that leverage.
My question is, do they actually have a choice? When the moment you think of doing that with China, you have Donald Trump calling and saying, wait, 100% tariffs on you for doing that.
So, no, what he said was if we do a free trade deal with, and as our Prime Minister said, we have no intention of doing that. Yeah. But what he has said is each economy should look after itself, and that's exactly what we're doing. So our Prime Minister has been on 4 continents in the last 6 months. He's signed 12 new trade deals with like-minded allies around the world where we will be expanding our trade. He's a business person. He has very clear KPIs. His KPI to us is you will double international exports beyond the U.S. We love the U.S. They're an important market, but it is in our interest to diversify. In essence, what India did with the EU is exactly what the Prime Minister is talking about. It's build and diversify your relationships so that you are less susceptible to economic coercion.
But no FTA with China.
India will decide what's right for India.
No, for Canada. For Canada to have an FTA with China.
What we have said is we have a number of irritants with India. We have resolved those irritants. We have a positive working relationship. We have a series of areas where we can have productive dialogue, much like in India. We share a goal to get to net zero.
Sure. Okay.
We share a goal to use renewables and get to maybe baseload renewables.
So we're talking red lines now. You're explaining what the red lines are, what's on the table effectively, right?
Yes, we have areas, and when we have conversations with China or with India, there are places where we say, hey, our two countries have differences of opinion on these areas. Let's park those.
Okay.
Where can we agree? Where can we work together? And energy is a place where we can work together. We can work together very well with India. We can work together very well with other countries because Canada is a clean and conventional energy superpower. We have the 4th largest reserves in the world. We have some of the largest reserves of uranium.
But you've been keeping that for the U.S., and I just want to ask you.
What I would say is we've historically chosen to trade primarily with the U.S. because it was easy. Yeah. In the new world that we're in, it is very clear that we need to diversify.
Okay, the reason I'm stepping in here, and I apologize for that, is because the allegation has come from, Scott Bessent, that your Prime Minister, your friend, somebody who, you were a businessman with, you walked back those Davos comments quite aggressively. And he's denied that. And he's denied that. Yeah. Your Prime Minister's already denied that. So I don't know if you've spoken to him since then, but what's the current status on China then?
So what we have said is we have a number of irritants. We have measured, and we will work on areas of trade. So let me tell you what we're going to do with China.
Yeah.
They have incredible renewables technology. We can use that technology to help get to net zero in Canada. India has some incredible renewables technology. I've had conversations with some of the leading companies here who are combining solar and grid storage and green ammonium in a way that can get us to net zero at a price we can afford. That's really exciting. That's an opportunity for us to trade more.
And that is exciting, and I spoke to the minister about it. But the narrative has shifted from energy transition. When India is a coal and oil dependent country, it's shifted from that to new energy was the thought, but the geopolitical order shifted. And I guess what everyone wants to know is Canada is now walking a tightrope. It wants to partner with China, it wants to partner with India, but there is, a neighbor who's not happy with the idea of that happening. So can you tell us what will that look like for the rest of the world?
So our Prime Minister has been very clear. We don't control what the Americans decide. We don't control what China decides.
So if there's a 100% tariff, that's fine?
We will build in a way that benefits Canada. The way that benefits Canada is to diversify our markets, to build infrastructure so that we can sell to all our allies, not just the allies that are next door.
India is excited that you did that, and I want to get into that in just a bit. And there's so much to talk about. There's the uranium deal, there's the critical minerals deal. But since you're talking about diversifying, Trump in Davos saying Canada lives because of the U.S. You saying yesterday on the stage out there that Canada used to provide 98% of its energy to one customer. We made a mistake. We relied on one supplier for natural gas, and that was a strategic blunder. We can never let that happen again. So Trump was right in a way, and now you're going to diversify, but will he make it easy?
We don't control what the president does. That's up to the president. Any of your business leaders, anyone who runs a business, if you said, hey, should you sell all of your product to one customer, or should you diversify your customer base? I think they'd all say, hey, it's probably in your interest to diversify your customer base. Look, in the old world order, where we had free trade, where we had multilateralism, having most of your eggs in one basket made sense. In the new world, where mercantilism is the name of the game, and where leading powers are saying we will use our economic integration as leverage, we have to do what the Prime Minister said. We will diversify our relationships to give us more leverage.
Okay, even if it seemingly comes at the cost of an antagonistic America. But okay, and United States of America.
We're doing exactly what the United States is doing. The United States is diversifying its trading relationships. We're diversifying ours. India just did the mother of all deals yesterday to diversify its relationships. This is normal.
Okay. Hardeep Puri, India's petroleum and natural gas minister, your counterpart, you met him yesterday, and then there was this development that you pledged to expand trade in oil and gas. What exactly will this really look like? Because we don't know enough details about that.
Sure. So Canada has historically sold all of its export natural gas to one customer. Starting this year, we have started to export LNG off the West Coast. We have a 12 million ton per year facility up and running, sending shipments to Asia. Over the next 4 or 5 years, we will be raising that to more than 50 million tons per annum. In my conversations yesterday, I heard a lot of Indian companies that want more LNG here saying, hey, this is a new potential source of supply. And what's really interesting about Canada is because of the way we make our LNG, so we do it with renewable power to do the liquefaction. It's the lowest carbon intensity LNG in the world. So if you have a chance to buy from any customer and from any supplier, and one supplier is giving you the lowest carbon intensity LNG in the world, do you want to buy that? Probably do. On oil, we have historically sold almost all of our export oil to one country. We now are building pipelines to the west coast of our country. Interesting.
What's the state of that? Because it's 3, I believe, right?
So we have one pipeline, the TMX, which is exporting almost 1 million barrels a day. There are expansion opportunities on that pipeline for another 400,000 barrels a day. And the province of Alberta is looking at developing a proposal for another million. So that's 2.5 million barrels a day of production. What's really interesting, your viewers may know this, the Indian refining, which is Indian refiners are the largest refiners in the world, have been investing heavily in their refineries. As they invest and raise the sophistication of the refineries, our crude, our heavy crude, is more and more interesting to Indian refiners. So in the conversations we were having, they were talking about wanting access to more of our. So we're doing what makes sense is, hey, we got a great product. Let's find all the customers we can.
Okay. There's so much to talk about. You said heavy crude. I thought Venezuela. I'll come to that in a bit. Uranium, $2.8 billion deal that's been reported. What's the status on that between India and Canada? You got to tell us something. Come on.
So I often say I was in the private sector for a long time. I learned a long time ago, you don't get out in front of your boss. You don't scoop your boss. As your listeners probably know, our Minister of Trade was here a few weeks ago, Minister Sidhu. Our Minister of Foreign Affairs, Minister Anand, was here to two great Indian Canadians.
Indian people.
Was here a few weeks ago. I'm here now. As has been widely reported, there are plans for our Prime Minister to come here shortly. I'll let them make.
But any color?
Well, here
in March he's coming. The Canadian Prime Minister, we understand he's going to be coming. There's going to be some announcements, but you can give us some color.
I'm not going to scoop my boss, but my boss has said very clearly he intends to be here early in the new year.
Okay. That's fantastic. Well, India looks forward to that, I'm sure. There was another development that took place, and this was interesting because I was speaking to the boss of Oil India, state-run oil company, and he said that they have initiated discussions with Canada for studying critical mineral resources. At the same time, you came out, or well, somebody from your team came out and said, yes, Canada is looking at supplying critical minerals to India.
Yes.
What's that going to look like?
So in the conversations that I've been having here, what I've heard is many of the leading companies in India want to develop a supply base of critical minerals here. You're obviously a very large manufacturer, particularly as it relates to renewable energy, where critical minerals are key to the transition. Yeah. Also your OEMs, your car manufacturers, your ship manufacturing, your aeronautical and defense industry. What we've heard is there's a real interest in lithium, there's a real interest in graphite, there's a real interest in copper.
There's an entire mission out here in India to go ahead with rare earths and all that. Yeah.
Rare earths was another topic. Canada is blessed with some of the best resources in the world. I think of the 30-something critical minerals identified by the IEA, Canada has every one but one. We're here because we think it's a great partnership. You need more of these minerals. We have them. Let's work together to develop them for the good of India and for the good of Canada.
Is there any announcement you're making today, tomorrow, that you want to give us a sneak peek into?
I will be in Delhi tomorrow.
For what?
I will be meeting with some of my counterparts, including the Minister of Mines.
Okay, we look forward to hearing what that development will look like. I want to talk to you about heavy crude oil that you mentioned. Venezuela's output is not likely to significantly hit the demand in the short term. But in the meantime, what's happened is that Canada is having record production, and your oil industry is thriving because sales to China are soaring. What does that look like when Venezuela perhaps comes back online? Does it weaken Canadian heavy crude? What happens?
Look, I can't speak for what Venezuela is going to do. I can't speak for what any other.
We have a sense of what they're going to do,
yeah.
Because the U.S. is claiming that they have commercial control over everything that happens there now, and some stuff is already happening.
Students of history will draw their own conclusions. I'm not going to project what's going to happen in a visit. But here's what I know. What I know is when I come to India, or I go to Europe, or I go to other countries in Asia, what I hear is we are looking for a stable supplier. We are looking for a supplier who will not use trade and energy for economic coercion. Mm-hmm. We are looking for someone who will be there in the good times and the bad times. And we are looking for someone who shares our values. We are looking for someone who shares a belief in democracy, who shares a belief in multilateralism. And they say, you know what? We'd like to buy from you.
Okay, since you mentioned this, trade, commercial interests, since you're a businessman also in the past, it depends heavily on trust and stability, even in the good times and the bad times. Mm-hmm. India and Canada did have a little bit of a diplomatic chill, mm-hmm. all right, for a couple of years. Mm-hmm. So why should people believe that that will remain the case under your administration, and therefore energy and trade will continue to, foster?
So this government has a clear way of looking at the world. Our Prime Minister and your Prime Minister have had discussions. We each agree that national security is important to our countries.
We each agree that foreign interference in another country's jurisdiction isn't in anyone's interest. Park that to the side. What do we also agree on? We agree that trading together is good for both of us, that focusing on energy and critical minerals is a huge opportunity and a win for India and a win for Canada. So let's park that and let's focus on how we can make wins.
Well, I do appreciate your candid interview, and thank you so much for speaking to us, Minister.
Okay.
Thank you very much. Thank you. All right, that was Tim Hudson, Canada's Minister of Energy. We'll take a short break. We'll be back with lots more. Welcome back. This is Inside India. Indian markets are coming online. The Nifty 50 opening higher by nearly 0.7%, and the rupee opening the day lower against the USD. It's still earnings season. There's a lot developing, and obviously the market sentiment will be impacted by the EU-India FTA that was signed. That'll continue to filter into everything that's happening. Now, another hot topic here at the India Energy Week remains whether India can start buying oil from Venezuela and cut its reliance on Russian oil further. This as India continues to face additional 25% tariffs from the US because of that. Remember, there has also been a sticking point in the trade negotiations between New Delhi and Washington. In that context, we caught up with the chairman and MD of Hindustan Petroleum right here and spoke to him about whether the company could start buying from Venezuela.
HPCL has been on a journey of upgrading its refineries. We typically weren't able to run too much of heavier crudes earlier. But in the recent past, in fact, early in January, we announced commissioning of a residue upgradation facility at our Vizag refinery. This facility is a very interesting one. It takes bottom of the barrels and converts it through secondary processing mostly into diesel. It's using a technology called LC Max CLG technology being deployed for deep conversion to this level, 93% conversion for the first time in world. So that facility is under stabilization. It suddenly allows us to process a wider variety of crudes, heavier crudes, which you can look at it.
Which is what Venezuela is
yes.
for. Yeah.
And the second part is in the near future, we are going to come out or start processing at our Barmer refinery, the HRRL. Yes.
West of India.
Yes, northwest of India. That's a joint venture between HPCL and the government of Rajasthan. Yes. That's been in making for some years, but now we are at a stage where we are going to start the process of commissioning the refinery in the next few weeks. We are at the final stages of getting some of the first of the units ready. That refinery also comes with a delayed coker facility. So both of them allow us the ability to process heavier crudes. In the past, we haven't run, to my knowledge, peninsular crude, but these abilities allow us the facility to look at that, and Vizag being a coastal refinery, it makes it even more easier. So we'll be very open to look at it as and when it's available.
Okay, but when you made this comment, had you already reached out to the US that is claiming that it now runs the commerce of oil from Venezuela? Did you reach out to them and seek permission? Can we get some Venezuelan oil?
Not as yet, because we are still in the process of stabilizing our units and getting them fully ready to receive that. But I'm sure in the due course, as the Venezuela trade also stabilizes, my team will take actions on those. But right now we are focused on getting our assets up and running. That itself is a complicated process in our business.
Well, that's all the time we have today on Inside India. Keep watching CNBC. We're right here in Goa at India Energy Week, and we'll continue to bring you conversations from, here. We're going to be speaking to Girish Tanti, who's the Suzlon Group's vice chairperson, one of India's largest wind turbine makers, and really a pioneer of the country's wind sector. There's more coming up because we also have Access Middle East right up next. So don't go anywhere. Keep watching CNBC.